Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry, I'm a little bit late and I'm a little bit slow today. I worked out really super hard. Let's fix that light there. Oh, that's so much better. Do I have that? Okay, yeah. Plus, I had a little bit of trouble, like the Elgato control center sometimes just dies. Anyways, to the chart. Oh, we got rollover natural gas. Okay. All right, so here in the treasuries, well, it was a crazy day yesterday. So actually, when we ended the stream, I was down and I kind of had a little bit of a winner. We let that run and I actually got a profit on the day, but basically it was like big down, big up, big down, big up, all over the place. So there is like some really extreme two-way action going on in the treasuries. But hey, big thing is when we come over here and we look at our DOM, we've got 1000s being put up there. We've got 1600s up above us. Liquidity is a lot better than it was when we started on Monday. So that's a good thing. Coming over to the equities. Equities are looking really positive, especially once they get around 38.50. So there are a lot of CTA strategies that have been short and would probably flip to long, the models show. So the flows for the next month are looking positive, and the next week is looking pretty okay too. But we've got earnings, especially today, I think, is Microsoft and a couple of other big ones. So that's going to be the big driver over there in the equities. Oil's still kind of in the doldrums. There's this whole thing between the Joe Biden releasing more oil from the SPR versus OPEC doing their cut. But we've been holding this 83 to 85 range pretty good for a few days now. Gold and silver, a little bit of pressure here. Dollar continues to be strong. Here's copper. But yeah, we'll come over here. The dollar. Well, it's way off of its highs, but 111.5. And Bitcoin. So Bitcoin started to see a little bit of a rise yesterday, but it pooped back down. So that's basically where we're at. And since we've started, it does look like there has been a little bit of upside action. I don't know where there was so earlier, about an hour ago, there was some big buy volume that came into the treasury, but it's been pretty flat since then. So I'm not quite sure what to make of it. I feel like yesterday when I have these days where like I'm down big and then I'm up big again, that's often a sign to me that I need to cut back a little bit. I don't know if it's like me getting manic or like the market just getting too volatile, but it's usually a good idea. To step back a little bit. Okay, so let us come into Twitter. Oh boy, Nassim Taleb talking about Britain. Okay, stop complaining about the turnover in Britain. You don't seem to get it. It is much healthier and more stable than Russia, Saudi Arabia, and other nations that have no turnover. The virtue of the system is that it does not depend on a single person. Bravo, I totally agree, Nassim. Macro Spaces last night with Jimmy Oreo turned into debating the merits of a Central bank digital currencies. Yeah, the whole thing. You know, the whole debate over central bank digital currencies and crypto in general, I think it's all just a little bit silly, just because it all depends on the laws that they put in on the central bank digital currency, right? It's possible to get all of the same features that you get out of paper money from a digital currency, or at least I believe it's possible. But I think the whole reason they want to do it is to not get all of those features. And so it would really be up to Congress to step in and say, no, we are going to have free money. Would they do that? I don't know. Mohammed A. L. Arian. Further to yesterday's tweet on this, here's the Wall Street Journal chart on the stock market moves in the last 10 days. The drops are even more dramatic when compared to the price action internationally. Meanwhile, the Chinese yuan continues to weaken both on and offshore. One mind's talking about quantum machine learning with near-term quantum computing. Fun stuff. Oh no! Well, that hasn't happened in a while. Are we still there? I'm still here. No, I think we're okay. Just was like a really quick disconnect. Kind of weird. Elon Musk, what lesson took you the longest to unlearn? Jeffrey Gunlock, the U.S. Treasury yield curve is essentially flat around 4.25%. If you want my take on this and other market mavens, double line roundtable prime is just a little over 3 months away. Okay, thanks, Jeffrey. For nothing. Yeah, and that's where I was last night. You know, so not too much on the Twitters this morning. Oh, by the way, I didn't mention, you know, I should always start out by saying these sorts of things, but we've got the house price index and a CB consumer confidence Richmond Fed composite. So, and then we also have a 2-year note auction. So I do think we've got a day ahead of us. The treasuries, it looks like they're waiting for someone to come in and do something though. So they're just kind of chilling. Is it a buy or a sell though? That's the question. Was this a little spike in 6J right about when we started? Well, when the Bank of Japan is involved, it makes me want to go long, but that's only worked out one of like 4 times, right? Netflix is hiring. I don't want to work for Netflix. Well, I guess I wouldn't be opposed to working for Netflix, but oh, by the way, you know, I didn't say anything about my new video, but I do have a new video out about shelter inflation, going into all the details. And there was a few comments on that, so I appreciate you guys that left a comment on that video. There's plenty of art to argue about on that subject, so go for it. Morning, Tobias. The reply to thread is order flow an outdated concept. Yeah, this person, I'm not going to read it out loud to you because this person believes in the technical analysis of point of controls. He says, oh, volume and delta don't add anything. You don't have Vicant. That's totally bullshit. So here's where I think that the order flow is really important. There's two reasons that I think the order flow is really important. Number one is that you can't fully understand what happened without seeing the order flow. So if you see a bar and there's a ton of volume, where within that bar did the volume occur at? Was it a bunch of market buys hitting into limit sells that were absorbing? Was it lots of market buys and market sells going both ways? Was it lots of market sells hitting at the bottom? You can't, it's just like based on the sequence of events and things like that with your regular bar chart, you can't really see what happened. And so to really, if you're just watching the order flow to get like the context of like what's going on, what is the trade like, etc., 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 you can't do it with just the bar charts. You just can't. There's just too much information missing. That's the first thing. But the second thing is that all of the really well empirically proven stylized facts about markets tend to be reflected in the order flows. In other words, like what we tend to see is you'll see really consistent behaviors in the order flow, and then the price, the resulting price, is kind of randomized around that. So when you look at price, it appears like a complete random walk, and you don't really see you don't really see the patterns until you look at the order flow. Like there is a very, very strong auto correlated effect in the order flow of like if you see buys, you're more likely to see buys, and if you see sells, you're more likely to see sells. And not only that, but we've been able to go through models and kind of determine, well, why is that? Because our initial impression and like what the technical analysis people would tell you is like, okay, I see a buy and so I decide to buy too, etc., etc. And when they used models to try and simulate that, they didn't work. But when they used models to try and simulate just one big guy buying over a long period of time, then the models matched up with the market data. And so that suggests to us that the statistical aberrations that we see in the order flow are largely caused by large meta orders, essentially, right? We wouldn't have figured any of that stuff out if we weren't looking at the order flow, if we were just looking at price, if we had focused all of our research efforts into just price, then they wouldn't know jack squat. And that's why the researchers and the Wall Street banks and all of them, they've been able to discover all of this science that is helpful to their trading, whereas the retail traders continue to be in this wilderness of randomness where everybody argues about what's effective and what's not, and yada yada yada. It's because they're focused on price, and you're not actually finding anything statistically significant in price. It's they make the price random so that they can market make, essentially, right? Oh, what's this here, Tobias? Bearish for today. This rally doesn't convince me at all. So if the S&P 500 gets above 3850 or so, the flows turn around quite hard. So there is just a lot of shorts out there in the equity markets in particular, right? There are also a lot of shorts in the treasury markets. So like when I come back to like my volume profile in the treasury, right? You've got a pretty solidly down, downtrend, right? So we've had like what? 1 day up and 2 days sideways, you can see that the flows are still kind of sell. But the treasuries are the same, I think are the same way. I don't know at what prices they would really shift. Maybe 111, but we'd have to look at the models and stuff. And I haven't seen any of them talking about the treasuries specifically. But let's just guess 111. Some of these models might flip around too. You know what? There is one thing I forgot to mention though. I'm just seeing this, and it was something mentioned in the news squawks that I think we should note, is that we've been steepening for the past little while, and we are seeing some flattening today. So there is some sort of a shift. Think we'll find anything on LinkedIn. It is out there on social media. Quieter day. There's our Cargill trader. I was on an 8-hour flight this week from Amsterdam to Minneapolis. Being away from family was not what I looked forward to, yet having time alone to think was what I thought. I saw a packed airport. What happened to our goal of flying less, as COVID taught us we could do business online? But then I heard Delta Airlines' mission to connect what is important to you. Okay, it is marketing, but I looked around and it made total sense to me. All those people around me were just regular people willing to connect to friends, family, and business partners. People with good intentions. No one was consciously willing to harm the planet or being indifferent. What is missing in the debate about our impact on the environment and solutions to reduce it is the need for businesses and entrepreneurs to develop and finance those solutions. We also need to acknowledge the crucial importance of travel for broadening our perspective, making connections with other people by truly seeing them and enjoying the short period we live with them. On the airport book stop, top 10 were 2 books I had already read: The Subtle Art of Not Giving an F and Surrounded by Idiots. The first is not about not caring about others, but about living your own life and not being distracted by the lives and choices of others, which have no impact on you. Subtle indeed. The second makes you better understand the perspective of others. Maybe I am the idiot, which is the natural thought of a trader. Yeah, it is. I think it is. People apparently seek less distraction, more awareness, and more effective and meaningful relationships. I watch 4 great movies, and this is getting really okay. I watched 4 great movies: Where the Crawdads Sings Fall, Brian Wilson, Long Promised Road, and Top Gun Maverick. Top Gun Maverick was such a good movie. Seemingly, they have nothing to do with each other, but the opposite is true. They are all about relationships, overcoming our fears, and doing something which makes you feel alive. Those movies got to me, and I thought humans are strange species. We create wonderful things when we connect and collaborate, yet only hours away from us, all we do is destroying everything. I miss my family and briefly felt claustrophobic and wanted to get out of the plane. Recognizing this feeling, I took a deep breath and counted till 10 and calmed down. Missing loved one makes you feel very alive. And at 30,000 feet, a lot of the unsettling things we face in the world right now feel far away. And this plane full of good intentions made me optimistic about the future. That alone was worth the trip. So I think that I'm a person that has been on the internet longer than most. Like, you know, I was making friends on the internet like pre-2000, and like most of my friends came from the internet as a kid. And by the way, good little trend up here. Very, very quick move there in the treasury. And so I've been in it a really long time, and I'm particularly plugged in, right? And the longer I'm plugged in, the more apparent it becomes to me the limitations of online interactions. There is just things about being in person and the way that people react to each other when you're in person that you can't duplicate online, and you can't duplicate with a VR headset and hands either. And like this whole VR push by Facebook to be like, I want to be I want my employees to be able to work remote but still have the benefits of being in person with each other, and we can do that through VR. No, you can't, because the benefits are all in like the facial and the physical presence, things that the technology still can't duplicate. This is why Facebook's foray into VR, like developing VR as a side project as they were, was a great thing, but like totally re-gearing the company towards VR, bad idea. It's a bad idea. It's going to hurt them. I think the way that this ends is Mark Zuckerberg gets ousted from Facebook and they focus back on social media. Wow. Only 13% of US households can afford to buy the average home. I'm going to do a deep dive. Are you going to make a video for us, Octavius? I'll watch videos by Octavius. This sounds good. You know what kind of interests me, though, on the dopamine aspects is like, how long does it take for the effects of dopamine on your brain to like abate, or how you deal with those? Because some people make it seem like you have to go on a dopamine fast and all these sorts of things. But the research that I've seen kind of suggests that if you just unplug yourself for a couple of hours, your brain can kind of rebalance yourself. But where it's a problem is when you're a kid. Like when your brain is developing under that much dopamine, it kind of does things to you. Makes you less, what do we say, ambitious. Ooh. Well, I was thinking about 416 and they already went through there. Too slow. The orders kind of stacked a little bit too much. Too quickly. Well, that kind of makes me want to back off a little bit still. Too quick. I'd have to just chase it now. Thank you so much. Oh, this is so cool. This guy wrote a book on quantum computing from a layperson to programmer in 30 seconds, 30 steps. And he has the solutions here. I am so down. I will look at that later today. Yeah, already up 8 ticks, but look, it's kind of doing the thing. Like it seems like the trend is up and the orders are up, but then like it'll fall back down real quick, right? Yesterday I saw the movie Money for Nothing inside the Federal Reserve. Very interesting. Can I rant about something that's tangentially related to that? So I was very disheartened by the response that I read from American conservatives about the change in leadership over in the UK. With Mr. Sunak getting put in. So like when you go to the conservative subreddit the conservative subreddit, they were mostly saying, oh, it's a diversity hire, which by the way is patently ridiculous. Like when it comes to the kind of financial situation they're dealing with in the UK, well, and at least like how does our budget affect the market and bonds and interest rates and that sort of a thing? Like he's the most qualified politician to ever step into the role. Right. This we've never seen a politician that was like a literal hedge fund manager, right? and everybody's all like, "Oh, he's a diversity hire." Are you kidding me? This guy was like the top of his class for everything. This is a book smart guy. It's just ridiculous to call him that, first of all, right? Maybe I just like him. It seems like I just kind of like him. And then the other side of it was like, oh, well, he worked for Goldman Sachs. He's part of the World Economic Forum. That means that he wants us to all eat bugs and yada, 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 right? And it strikes me how there are many political ideologies out there in the world today that I think can really work against you as a trader. Like, I'm a very, very conservative person. I see a lot of things going on socially, especially like between men and women. I feel like that the internet has kind of messed up our calibrations and really damaged relationships. And I think that society would be healthier and people would be happier off if, we got married young and had kids. But when I come into like financial stuff, there's a lot of things that conservatives would say. And so if I was just following the conservative line, right? But when you're actually involved in the industry, it's very obvious that those ideas are wrong. Like, it's not the case that if somebody worked for Goldman Sachs that there must be a globalist hack, right? I think the reality here is that most of these corporations, and especially corporations like Goldman Sachs and JP Morgan, believe very strongly in contributing to the community and being a good global citizen. And the left has kind of hijacked that and got them to promoting ideas on the premise that these are the good things to do as a good global citizen that really actually weren't good for everybody. And I think that they were kind of misled. And so like the World Economic Forum, I'm like, it's a forum, guys. Okay. Like there are some people that will present at that forum that have some stupid ideas like that we should eat bugs. Okay. But it's not like some global conspiracy. The reality is that open and free trade around the world has created the greatest era of prosperity ever. Okay. And so, yeah, it would generally be a good thing to continue to have that free trade. But it's also become very apparent to anybody paying attention that Russia and China have gone off the deep end and are not going to be they don't have any integrity when it comes to free trade. And so we need to deglobalize to some extent, right? Some people at the World Economic Forum maybe haven't gotten the memo yet, right? Okay. But if you're a conservative and you come in with the conspiracy theory that it's all about the global cabal that is trying to keep you down, that they just see you as cattle or something like that, right? I think you're gonna miss a lot of what's going on here. And you know, like this UK thing, I think a lot of people are very pessimistic about it. But I don't really know this guy, the Sunak guy, but I like him so far. Something about the guy, I like him. I guess I'm kind of optimistic. And I think that some people might miss opportunities just because of their political pessimism and general overall kind of like bitter, cynical takes on the world. You know what I mean? It usually doesn't pay to be the bitter negative one. You know what I mean? Is monetary policies during COVID helped get them where they are now? Well, I don't know all of the details. I mean, I think that the reality of that sort of thing is like, maybe you have one policy and it doesn't work out, right? We're very good at in politics being selective about, we'll only pay if we don't like a politician, we'll only point out all of the things that they did that we didn't like. Like this happens a lot with guys like Larry Summers, for instance. Like Larry Summers has been involved in so many policy decisions over the decades that to say that all of his decisions were bad is kind of like, well, he made some decisions that were really bad for sure. Okay. But yeah, how can you look at the totality of his work? There, a lot of the decisions that he made that were good, nobody would ever even talk about it. You'd never even realize that that was him, you know? So all I know is that he's a conservative and that he understands what's going on here in the market in a way that Tress did not. Well, they have not quite moved ahead. I am seeing flattening still. So the 30-year is still up there, and that's why we're not getting a pullback in the micro 10 years. Overall, at the moment I'm still glad that I did not chase at 15.5. But that could change very, very quickly if we take another little jump, right? Take another little jump. Anyways, the other place where I really see people have you get political opinions that could really negatively impact your trading is when people have a very negative opinion of the Federal Reserve. I think that if your opinion is that the Federal Reserve shouldn't exist, that you're going to have a hard time understanding how the Federal Reserve operates and what they're likely to do in certain situations. 1376 hit into 08.5 and they ticked down. The 30-year is still chilling up there. So that's maybe a reason to buy 08, to be honest with you. But I just see it all over the place. Where it's like, there'd be a subject, I'm like, oh, I'm excited to talk about this subject in finance. And then you get to all the comments and they're all ignorant. And I saw a lot of that from the conservatives when talking about the UK thing yesterday, and it was very disappointing. I mean, it was also disappointing that there was like a lot of people saying things that were practically racist too. That also was disheartening, but well, not getting a whole lot here still. Like in terms of like social media, really quiet today. We did get the Case-Shiller price index. This is a number that usually doesn't move markets too much. But oh, it's not showing me. Hold on. Month over month, negative spot 7 versus an expected negative spot 6. We are seeing maybe a little bit of a rally in the equity indexes because of this, but I don't think that the treasuries have reacted to it yet. Yeah, they're just going. So I'm looking at the volume. It is definitely tilted to the long side, but there does appear to be a little bit of two-way trade here at the highs, and it's a little, should I say, unusual for the recent past to see us come up to a high like that and just chill there for a while. I think that generally speaking that's been a bad sign, but that's just my tendency, right? That's our human tendency to want to use technical analysis, right? Don't know if it really tells us anything about if we're going to move higher or not. I'm seeing equities rising back above 3,800. Oil, seeing a little bit of a drop here. Seeing the 6J looks pressured to the upside too is maybe part of the driver here in the treasuries. Interesting. And they do come down here. Is it gonna fill me at 08? Watch, it's gonna fill me my sim order at 08, and then it's gonna like just crush that going down through, and it's be like, oh, I missed the party. But I think I can pull 2 ticks out here, so let's see. Looks like I could have easily have gotten at least 1 tick. Oh, yeah. That was the perfect scalp right there, man. Does not get better than that. I saw that there was a little bit that they were easily able to trade through this range. The pressure is clearly to the upside. So I got filled on the end of the range and took it out, took the profit at the middle. Perfect scalp. I was thinking about taking a live trade, but I think I need better prices to justify it. Shall we recenter things there? I got a number of things. You know what I was thinking about today, because I did finish my book and I was like, oh, I need to start the new book. And I was starting to read Stigum. But probably I should go and read Fed Guy's book too. Guess I need to go get it. Why do you think there has been so much intraday volatility in markets recently? Well, so volatility is like 70% path dependent, right? So we had a couple of dramatic events. Actually, so if we come back over here to this chart, so let's see here. What was the 13th was CPI, wasn't it? Let me come back here. I need to refresh. It looks like I haven't been keeping up on this. The 13th was indeed CPI. I think that I did mark it, but that I didn't save my charts that day. It had crashed, and so I drawing tools event. CPI. And then the 14th was retail sales and consumer sentiment. Let's see here. And what happened last Friday, was it? All right. Fed pivot. We'll say Wall Street Journal and Bank of Japan. Okay. So I think that the one that really kind of hit the markets hard was the CPI, right? And then we've had on Friday, we had a story from the Wall Street Journal, and the Bank of Japan also came in and did significant intervention in the market, right? So I think that we're still kind of seeing volatility from that, right? And then you consider the business that we got going this week and today and everything. On Monday was kind of a big day because we had options expiration last Friday, and so a lot of that gamma unclenches, right? But then the other side of it is just that liquidity has been crap in all of the markets. Liquidity has been very, very poor. So the volume that we do have has that much more impact on things, right? So that's really what it comes down to. It sure does seem like there's more volatility than is warranted in many of these cases, doesn't it? But that's just, I think, them moving in accordance with what the recent ranges have been. Okay, so that was a big buy right there at 10. Now I'm even looking back at 4.15 and feeling like, oh, that would have been nice. Okay, but a stack at 10. So I am a little bit weary about this. Well, so what I'm seeing, I need to be careful about saying like what I'm seeing is going to be predictive or anything. But I am seeing that this trend up is a little bit different. They're going through a lot of volume, right? They spent a lot of time here at the highs. That can be the sort of thing that creates like a false breakout and hits back down. But like the split side of that would be like, think about the trend that we had yesterday, right? So we weren't here for, it was after the stream, but the trend that we had yesterday was a very slow grinder and a lot of volume traded through that whole thing. So we might be getting that again today, which would make it a really good trend to jump on. Look, 3166 hitting back into 10.5 and being absorbed as well. There's a lot of volume trading here. And it looks like it wants to keep going. Part of me, I'm not sure. Well, okay, so when they ticked up, there was some stacks that disappeared below us, but I was kind of feeling like, well, at the moment, I'm not feeling a very strong desire to trade. Not because I don't think that I'm going to make money or because it's like bad action or anything like that. I don't like the prices that I'm getting. Like, I feel like I have to chase this thing. Every step here has been like you'd only have gotten it if you chase it. But I also just feel a little bit slow on the draw. Like, I worked out really, really hard yesterday, and I think that my nervous system is a little slow today because of that. Because normally this kind of action would have me a little bit trigger happy, right? Wow, 28 traded to take 4.14 in the 10-year. So that's interesting to note, because I was thinking about hitting it. Well, I wasn't thinking about hitting it, but I was wondering what would happen if I hit it. Would I run into a wall there, or would it go? Well, it has gone, but probably largely because one big guy did hit into it. I'm starting to see, like, by all the things here, gold is on the upturn, Japanese yen is on the upturn, treasuries are on the upturn, Bitcoin is on the upturn, oil has recovered its downside and oil is on the upturn, S&P 500 is on the upturn. So yeah. And look, it's still trading a ton here every step in the 10-year. It's pretty strong delta. Yeah. So from when we started, we were like negative 91 and now we're like 70. So it's been about 20K contracts long, but like more so than that, I think that the big difference on this move, more so than that, is that there's just been a lot of volume trading on it in general. So it's not actually that extreme of a change in cumulative delta, but like, look, they're trading 3,500 at each step. This is what the treasuries used to trade. So you're not necessarily seeing it on the resting liquidity, although we do have a bunch of 2Ks above us here. Okay. But when you look at how much trades, this is more like regular liquidity. And it's been on a slow grinder up, much like the grinder that we had yesterday. So somebody big is coming in. It must be a foreign government. Is that, well, I shouldn't say it must be, but that's my theory. Is that a big government is coming in and buying some bonds. Maybe the Bank of Japan is coming back and buying more after dumping a bunch. That would be funny. That wouldn't be funny. That actually might be the best way for them to do it. I don't know. I don't know if that one makes sense, but this stack here at like 12, it's kind of been following them up since 10, hasn't it? Okay, so they take the big order and it trades 2,000. And they take 11.5 as well. But like, if this continues to be the slow up grinder, like that's the best you're gonna get. Right? I think we have to be careful chasing this. This is a little bit, there's a, I'm not gonna say like there's a strong chance that it comes back, but like, you know, you don't want to be the one buying 13 and then it comes all the way back to 09, right? Because if it comes back, that's what it's gonna do. Also noting here that after those couple of big transactions in the treasury, a little bit lighter liquidity now. That I like, they're trading thousands now, 500,000. Quite a bit of back and forth at 12 too. So that's kind of more indicative of a market that's gonna get stuck in the mud rather than one that's about to see another strong leg. Not gonna chase before the open. I don't know, man. Well, we're probably too late. Oh, you know what? By the way, I never turned this strategy on. Let's turn this strategy on. Enabled. Okay. Yeah, there we go. Okay. I mean, I would rather if I'm thinking about this. When did the flow start coming through here? Yeah, it would have been better to be along like 3,800. Who are the big players by? I don't know. So like I kind of suspect that it's a country. Maybe dealers, I don't know. Like it seems like something has changed in the treasury market because this is just like a really, really strong bubble up, right? Like I've just sat here through 2 basis points being like wanting to chase it and trying to be conservative about it. And like look, they're squeezing them at the top here in the 10-year. It's not just going, but that looks like a strong setup for like stop limit. No, how do I do this? Wrong one. Yeah. Stop limit 13.5 sort of a thing, right? I've heard it's not Japan or China. UK's, I don't know. Like that's the thing is I don't have enough information to know what country it would be. I can just guess based on the volume that there's a possibility that it's a country behind it. Wow, look at that. It dropped down and almost immediately 2 ticks up, and they even took out a big order on it. Nope, wrong button. Now they're eating into that 13.5. Man, look at the dollar. There must be, you know what? Actually, so I haven't. It's been a while since I've looked over at the Japanese yen. The Japanese yen is spiking hard. But I mean, I'm seeing all of the currencies move really hard. Success is moving hard. Like the dollar is just getting hammered here. The dollar is getting absolutely creamed. Case-Shiller Index shows home price growth decelerating. I don't know if that's what's driving it. It's a good question. It did kind of seem like that after the Case-Shiller news that's when at least the equities kind of turned bullish. I guess the pressure in the treasuries was to the upside, but it's a little, I don't know. So we did get a little bit more of a pullback. I don't know if that's enough to try and play like the after she goes kind of move, but could just be speculators, hedge funds, institutions, whatever, saying, yeah, the Federal Reserve is definitely going to back off interest rates now, right? Seems like it sure got everybody's attention though, didn't it? Yeah. So now, okay, so the 6J is having a pullback. The dollar is having a pullback, but that now like even oil is positive. So like, what do we still have negative? Copper is still down by 1%. Wheat, corn, silver is down just a teeny bit. Biggest winner right now is natural gas, followed by ZB, flattening. Bull flattener. That's what this is. Man, bots are out in force today, huh? Okay. Hit. Oh, it didn't clear it. There we go. So there's another basis point or so. Jeez. Jeez. Oops. I keep putting it wrong. Yeah, that would have been bad too. Okay. Housing is one of the most sensitive topics for the Fed, I suppose, after 2008. Well, I guess the reason why I'm not so sure about that housing numbers and everything is that tends to be a low tier release. Well, here, where is it? 25th composite HPI change in the selling price of single family homes in 20 metropolitan forecasts. This is one of the few non-seasonally adjusted numbers reported on calendars as the primary calculation for this indicator. Leading indicator of housing industry health. Okay, I'm wrong. I was gonna say I think that a lot of that information in that report is like the market already knows. But I mean, like, we already knew that housing was cooling off, right? From the report that I got, the video that I put out yesterday. We were kind of already seeing that. So that's why I'm a little skeptical about it being like that's the driver behind this. I think that it was moving anyways, and it may be the Bank of Japan behind it. I don't know. The thing is that like if it was just the Bank of Japan, I would be seeing like the 6J going up and the Treasury's kind of slipping after it and chasing it. But there's actually quite strong volume behind all of this in the Treasury. So jeez. Look, another big stack at 14.5. How far is this gonna go? Well, let's see here. Yesterday's highs were 15. So we are through yesterday's highs. Yeah, that's why that's why you had all of that, was because of yesterday's highs. Whoa, okay. That is okay, Seth, you got it. Wowzer. Okay, out of both of them. Wow. Okay, so let me just review why I did that. This could be like so totally the wrong move, but we had a break of the highs at 15. Yesterday's high was 15, so they broke through yesterday's high, and it was quite aggressive. Like, look at, there was 5K there, and then there was all of these big orders that came through. And did you hear? I don't know if you can hear them. I don't know if I have the sound set up correctly here, but we had like block buys and block sells through here. So let me come in here and just make sure I've got this on the right. Looks like I don't. So where is my which one is it? How come I don't see it? I think I want to put it on the cable input. I don't know if that helps or not, but wow. Okay, so anyways, okay, did we just get another move for a little bit further? 4112. Oh yeah, we did. Yeah, we did. So the reason why I'm taking that is like tons of volume, so really high. Oh my god. Wow. Like, okay, so there's a really high probability somewhere in here of it pulling back really hard on us. So I'm a little bit cautious about, man, there's got to be something's going on. That is not so, right? That all just right at the equities open, huh? Well, what was I trying to tell you guys about equities? Like, I'd rather be in at 3,800, but the flows for equities look positive. That was a nutso move, though. Like, I don't. Maybe that was all just stops and everything, but that was like really wild movement. Like, that's like a top 5 strongest moves in treasuries I've seen, you know? I am kind of looking at this like, well, so I don't like the way that it's gone. Like, there's a really strong, there's probably going to be a really strong liquidity hole below us, and we could get sucked into that. Who knows how far it goes before that becomes enough of a force to pull them down, but like, that's what I'm worried about. That's why I took the quick profit. Looks like I could have gotten at least another basis point out of it, but after that happens, I'm kind of wondering, like, what is their longer term trajectory here? And I kind of feel like that we may need to get back to like the CPI number levels, like, you know, like 112. Like, there's like two more points this could go. You know what I mean? But also what we're seeing in the yen, that does make me strongly suspect Japanese intervention. Yen intervention. Are we... No. On Zero Hedge, I see home prices plunged most since 2009. Pulte CEO fears financial and psychological hurdles ahead for home buyers. GM jumps 5% after reaffirming EBIT guide. I don't know, man. This is trading like there was news, but there is no news. Therefore, my best theory is Bank of Japan. Gold and silver are rocketing out of here, by the way. The dollar, like, that's just the theme here, is the dollar just getting crushed. Now on the dollar, you know, like, I felt like when the dollar got up to 100, it's kind of like, wow, the dollar's kind of strong, and then everything after that has been insane. So if I was, you know, expecting this whole move in the dollar to unwind, I think that the target I'd be looking at down below would be 100. Yeah, but that's a long time. Yeah, who says bonds are boring? Man, when the bonds are doing something, man, they are the most exciting. They are the star of the show. Alligator says in doubt. I don't know. Maybe what we saw there was just a really insane stop run. Cause like when I see a stop run like that, yeah, like I'm usually looking to take it off, right? And for them to then very, very quickly extend even further all the way up to 23, that is like, you rarely see that sort of a thing. And no clear news headline to drive it is extremely unusual, right? You think that the ES is that's just the opening drive and they're gonna trend day down? What makes you say that? So on the equities, guys, just think, okay? What are the flows driving us right now, right? What are the flows driving us? So in the treasuries, we got all sorts of interesting things that we can kind of hypothecate might be behind this kind of volume, right? There are CTA strategies that are maybe getting jumping through here, stop runs, because it was like if after 15, which was the previous day's high, it accelerated. That's definitely true. But we're seeing the dollar get crushed, so it could be central bank intervention of some sort, right? Over in the equities, what do we got? Well, we've got a bunch of earnings today, right? So, and those are earnings from companies that are tend to be the stronger ones too, by the way. Okay, so that's the first thing that you got. Second thing that you got is the CTAs are just insanely short, right? And we just rolled off all of the gamma, so that kind of sets you up for a position of a short squeeze turning into its own self-reinforcing cycle in the equities, which is why from the very beginning coming in here, I was saying that the equities look like a long, but it wasn't a strong long. It was a tepid long. So you really got paid on that one if you went long at 3,800. Okay, so they are maybe cooling off here a little bit. John Stevens tweets, Rishi Sunak has left the parliamentary estate. The sackings are over. Okay, so they were firing people, I guess. Well, we are waiting for the... Well, I mean, last week, I wouldn't have said go long necessarily because of options expiration, right? And the week before that, I wouldn't have been saying it because we had CPI. Now is a situation in the S&P 500 where you get the economic number drivers out of the way. What's left? Kind of more of the institutional flows and the earnings, right? So for me to come in and say, okay, this was just an opening test drive, now I want to reverse the S&P 500, I would need to have some predictor of order flow that really strongly suggested that we should be selling, right? So another thing I'm noticing here on this move is we were flattening at first, but when that stop run happened, when we extended above the previous day's high, right? We steepened considerably very quickly. See, that 5-year is still kind of like reaching up there like, I really want that order at 24. It wants it. You're short. Oh, okay. I mean, if you're could be taking like a scalp, right? But for the thing that I'm talking about, I'm not going to be like selling it here and trying to hold it to the close or anything like that, right? Unless I really had a strong predictor of order flow that said that the flows today are going to be negative in equities. Like maybe I know that the earnings that we've got coming are going to be really bad. Right? That might be one good theory. Oh geez, are they just I'm feeling so FOMO right now. Look at him come up to that. I mean, they gave me the chance to do it, and I didn't take it, so what happens, happens, right? Woo! No. Yeah, you can be careful about that one. Okay. Got a little exciting there for a moment, and then they've come back to 23 and are kind of chilling. So what I think I'm seeing here is more signs of them running into a, impact of their orders and getting stuck in the mud as a result. They could still extend because of the way that this has been. Like the market orders can just pop out of nowhere, right? See, there's another coming up to it and falling back. Is anybody tweeting about this? Let's read what Nick Timoros has said about the house numbers. U.S. home prices over 3 months ending in August declined 0.9% compared to the 3 months ending in July. All 20 metro areas in the S&P 500 Case-Shiller Index. Oh, that is a level break setup right there. All 20 metro areas reported month-over-month declines in home prices. On a seasonally adjusted basis, prices fell the most in August in San Francisco, Seattle, San Diego, Phoenix, and Los Angeles. Yep, no fill. Damn, look at that. And the big stack. Probably what I should be doing is sitting here with like a limit order and just hoping that I get fill. Two stacks, 23 half and 23. Yeah, it's likely to pull through. This is getting a little zany, isn't it? Darn. So we don't particularly like this one. Like, I got the move that I wanted and I didn't get my fill on the exit, so I'm just gonna pay for some commissions Yeah, alligator's right. Well, I could have gotten more on that. It's okay. Yeah, we do have news at the top of the hour. But like, look at this stuff, man. We really should have just done it at 4.1, right? Or really 15. Maybe 4.2. I could have. There's plenty of places that we could have done stuff, right? No, don't like that. Jeez. The S&P 500 is just rocketing out here now. How are your shorts doing? I shouldn't glow like that. I apologize. This kind of action is kind of funny because, right, I've been like hyper cautious because it's like, oh, that's such a strong move, it's gonna come back really hard and everything, and then it just keeps going and going and going and going. It's like, really should have just been short rates and just been sitting here all morning, right? And I'd be up almost $100 over $100, I think, right? Okay, there's a big order 25.5. We're arguing in Discord, trying to sort out why this is happening. He thinks just rates. I don't know, man. I can't explain it. Sometimes it moves because it wants to move. It's true. It's true. It could just be that. Could just be. So I think we watch this. If it's the Bank of Japan, so what I was saying in Discord is I think there's a strong possibility that there is a country or a central bank behind this sort of action, because this is like a top 10 kind of move that we're seeing, right? So the Bank of Japan, having been active in markets, is a strong theory. Would the Bank of Japan have the impact that they've had on rates? When we've been seeing moves in the Japanese yen, it's kind of been like on its own, and it hasn't affected the other instruments as much. It also hasn't happened at this time of day. Okay. So, but when we have seen these moves in the yen, what'll happen is like really, really big move, and they'll retrace over half of it. Right. So if that's the case, if that's what's happening, it wouldn't surprise me to see the Treasury come all the way back to 110.16, for instance, right? So if we get a really, really slippery pullback, I think that increases the case. I think that helps the case of it's the Japanese yen. Now, if we say it's really not the Japanese yen, then how else do we explain it? Well, the housing numbers were helpful, for sure. Does that create this kind of a move? I don't know, man. Doesn't seem right. It was a slow grinder, and all of a sudden it turned into craziness, right? Stop runs, sure. But like 4 stop runs in a row and just like absolutely insane trend that doesn't barely pauses at all. Super strong volatility. I don't know, man. That's a really crazy move to be just to happen just off of housing prices. Possible, I suppose, but never seen anything like that. Like the whole thing is that like when treasuries are buying, like the only type of uptrend I've ever seen that's anything remotely close to this has been situations where like something really bad happened and there was flight to safety, like geopolitical risk or something like that, and people were wanted to buy treasuries because they were scared. But for us to have a move like that on seemingly nothing, that's highly unusual. Highly unusual. Let's just put it that way. So, but that does kind of put me in a spot where I could say, hey, I might be able to short this, right? I'm a little scared to do it though. I know what I need to do, but I don't know if I have the strength to do it. Nancy Pelosi and Bullard hit the trigger. Somebody pushed a button somewhere. Lots of buttons were pushed this morning. Yeah. The whole thing is I think that in a move like this, the sort of thing that frustrates me is that I was feeling long and I was a little bit slow, so I could have maybe have caught some of these, but there is no way when we started here today that I thought that we would have a move like that. Absolutely not a chance. It's just such an extreme move. So you can kind of sit down and be like, well, I should have been in that, but I even if I had been in that, I would have taken profits early, probably, right? So people who bought know something is coming, otherwise waiting for the day of the news is wiser. Well, they don't necessarily know, but they might have something to strong suspicion. Because he says that's what happened to me. Yeah. Well, like taking the exit after the slip from 16 to 20. Yeah. Almost certainly would have taken that either way. So okay, so here comes the next slate of news. Richmond Fed Composite Index. Oh. Okay. Richmond Fed was -10 versus -5, and consumer confidence was 102 versus 105. So those are both bad numbers. A brother can only handle so many block trade alerts against his desired direction before he starts to wet himself. So a couple of people have hit in this 078, but it didn't break. There's a little bit of iceberging and still thick action in the 10-year. But it does appear to be moving slightly to the upside after that bit of news, and that bit of news was another set of negative numbers. Like if we hadn't have already seen like a lot of upside here today in the treasuries and everything, I would think that Richmond Fed Composite Index being -10 versus a previous of 0 and an estimate of -5, yeah, you would have seen a big move off of that. So it's actually a little crazy to think about the interest rates that we're at, because it felt like we were just right at 4% only a few days ago, right? So I'm kind of looking at that, like in terms of rates, they feel like they're destined to go back to 4, right? That's a big hop and skip away from here, right? A reason for risk on. Wow. This is one of those situations where what the S&P 500 does based off of the economic news is kind of messed up, isn't it? So they did break highs, but they're pulling back quite quickly. So I'm not liking this. How many positive ticks did I get on that? 9. No, 7. Okay. Yeah. I'm just gonna wait. It kind of does look like they're selling the news. So I'm not seeing like a peak, and you know, it's kind of flattening out here a little bit, and then is it a 4% move in the 10-year yield today, says Octavius? Oh, so let's come back into our daily ZN. It's up there, but it's not the biggest. It's not even close to the biggest move we've had this year. Is that the biggest one? 928. Yeah, okay. So they are forming a pretty good liquidity hole 26. Oof. Hmm. Okay. No? That's curious. So I am seeing the 6J turn back down pretty quickly. The dollar's turning around here. I'd say liquidity still looks good. Like we're still trading 1,000 at most prices. A little fight in the tape too. Hmm. What a move. It does feel like that at least the initial crazy buy zaniness is over. And I'm just kind of sitting here reflecting on everything that we saw, and yeah, I didn't make a whole lot on it. I was, like I said, I was a little slow on the draw today. Not feeling super, like, not my energy levels a little down, but it was sure exciting to watch, wasn't it? We could be seeing the start of a down move. It looks like that there's a little bit of support here around 24 though. And they're kind of fighting all around here. It looks like they're trying to flatten out again. Like the 5-year trying to flatten it. These ticks here are not super strong though. I think for this downside action to really be significant, they really have to break below 23, right? Or just kind of seeing everything across the board pull back though, aren't we? I wouldn't be surprised if we come back. I wouldn't either. Like there's a lot of reasons when we try and look at what drove this flow. There's many reasons to think that it was exaggerated. Like not the exaggerated is not the right word. Overreaction. There was an overreaction. We're definitely getting flattening here. Did you see that the 30-year is up 2 ticks and the 5-year is down 2 ticks? I mean, we are seeing a couple of things that kind of suggest that we could start to see a bit of a reversal and a push down, but the downside flows are not too inspiring at the moment. Finally, some volume in listed spreads after 2 weeks. Look at that. That's messed up. So that puts me at break even today, doesn't it? Yeah. A little loss. Treasury is moving up while the 6J is moving down. Hard to tell on that one for the 6J. You're getting a nice little uptrend there, although there's not a lot of volume behind it. Let's make a little note here for Twitter. Darn. Okay, well. So on that move, coming back down, the treasuries all seem to be pretty in line. I didn't really see any shifts in the yield curve on that one. There's a 1600 there at 24. I can't see today daily ending with a long upper wick, but if it does, oh boy. Well, I don't think that it will be like a long upper wick, but I think there's a really good chance that we see 110.20 again today, for instance. I do see some, yeah, crap. Crap. Like I started to see some action that made me think that yeah, it's coming back here, but like what I'm seeing now is more just trading back and forth across the range from 24 to 28. I think this is one of those situations where seeing the price come down kind of makes you think, the trend is coming back the other way, but I think the order flow kind of suggests that we're in a distribution area, right? A little bit of flattening there again. Now, okay, so 2000 to trade down 26. So now the question is, if this is just ranging in 24, does that tell us anything about this move? It kind of does. I think it kind of says there was a bunch of people that bought and then they ended their buying and they're just resting into the liquidity hole that maybe whoever it was that was buying had a really good reason to do it and is in it for the long haul. I don't know. It is a little curious to see it die down so quickly, isn't it? Okay, well, there was a few ticks there. You know, it does seem to me we were trading a lot through there, but I am kind of seeing a couple of spots where it's still a little slippery. Like we traded down through 25 on practically nothing that first tick down. Hmm. Easy take at 25. Maybe we are getting a meta orders short. I am seeing a little bit of selling coming into the 5-year. This song that we're listening to has a sense of like resolution to it or something. We give it the like. Darn, I saw a lot of ticks in my favor, and I think that I just picked a shitty price. Darn. Clicked away for a split second. Hmm. The 8 would have been so much better of a price. Federal funds traders see a better than 50% chance of a half-point rate hike in December, a 52% chance of a 50 basis point hike by the Fed meeting at its final meeting of the year, and just a 46% likelihood of a 75 basis point. Tweets trading floor audio. Your playlist of birds chirping and stuff, and my playlist of heavy death metal mixing is interesting contrast in my ear. You know, there's like ways, I don't think that YouTube supports it, but there's ways to like separate the music out in the stream so that you could watch it and like turn the music off if you wanted. You can kind of, there's it kind of in Twitch they use that, and I don't think that they make it so that the users can turn it off, but they can make it so that in the VODs you don't have the music. Isn't that interesting? Okay, so there was a little bit of so it looked like the sellers were making some progress, and then it slipped back up there. And now that we're at 26 half, now it is really dead. Now it is really dead. And it's been about 45 minutes. Because the last really big move was really at 750. You can see it's kind of squeezing me. Interesting. This is a little robot selling their 26 half. And then it bids again. Ouch. Well, I think I gotta give up on that one. Could see all of the retail traders bailed there. I'm really skeptical of like new highs, but somebody really shoved there. Oh, 7 is like a really terrible price to take, like right there. Like I could hit it, but hmm. Hmm. So they're kind of setting up like they would do a level break. At this point, I'm not so sure. You can see liquidity is a little thicker here. Hmm. I'm a little suspicious of this movement here. That really kind of feels to me like trying to trap someone. Yeah. And right back to 26 again. Question is, can I make money off this range? I think at this point it's a little too dangerous. I don't know. It's possible they could come up to highs, but okay, so there's settling back to 26, right? if we wanted to go short, here's your maybe 1 year. Well, that last buy was probably the spot to do it, but there is kind of a little bit of an ascending triangle sort of thing going on here. I don't know if there's actually a real order coming through here. Like the flow has been really choppy and sideways in the 10-year ever since that initial stop run. If I'm anywhere that I'm seeing the buying, it's the 30-year. The 6J is pretty varied here too. It's not coming like straight back down, so I do kind of either the Bank of Japan is getting better at it, or it wasn't the Bank of Japan. I am kind of leaning more towards now that it was not the Bank of Japan. Okay. There's some aggressive takes in there. Now, do they hit that 24? Well, a few orders hit into it, but they immediately bounced. Come on. Okay. Let's see if they take the 24. It's a good offer. 28.49. Okay, they clear it. It's 4K. Now there's a big one in the 5-year. Nope, still there. There's an iceberg there for sure. How big is it? Five. $29. 33. 33, but then it goes bid and there's some fight. Oh, he's buying it through. There was a big offer there at 24 too. I'm going to resist the temptation to recenter because I do want to see them. Okay, so now they trade through 24 on nothing. On 92 contracts, it goes over. No strong offer on it, but that's not a good sign for the buyers right there. So you have a big fight, then you come back to the area and there's nothing there anymore. Put all of that work into fighting on one spot and then there's nobody behind you. Yeah. Yep. That's exactly what happened there. Well, we do run the risk of that 24 being a hole that becomes difficult to get away from. But especially in the 30-year, it's looking like reversal. First test 3850. Oh, good observation. It is interesting to note that as bullish as it has been today, they haven't gotten across that key marker of 3850 in the S&P 500. Yep. Okay, well, now 24 is holding. Oh, it's interesting. The 10-year and the 5-year are both at 24. Well, there's a pretty good sell through there too, by the way. Like the net result of all of those big icebergs down where I recentered the DOM was selling. So this up move that we had may just be kind of like the settling back through. Kind of looks like there was an impulse sell and that they're done. My son, good morning. You're a little late today. Where you been? We're getting a little spotty liquidity through here now again. So I guess all of the market makers, spent their wads down on this thing down in here, and now it's getting a little disorganized. Yeah, I don't know. I'm a couple of these ticks now feel a little discouraging. I'm not seeing quite the sell wave that I was hoping for. I did get a much better spot that trade though, so there's that. See, there's actually been some big takes at 25 and then it goes bid again. Ow. Jeremy Hunt to remain UK finance minister. Yeah, that's a little weird. Like, they've slipped back and forth across these prices between 24 and 26 like several times now. But you can see that, like, when they come down to 24.5, the drive to push it there is not so strong. Okay, so they slipped that one, but then see, yep, pick back up and 700 bit. Well, I'm definitely finding myself having to kind of like adjust my calibrations, because it used to be that seeing 700 stack behind it was like a really good, but that seems to be just kind of average now, which is what it has been historically. So I feel like that the 5-year still wants to flatten. So did you see there the 5-year tick down, then the 10-year tick down, and as soon as the 10-year tick down, the 5-year tick down again? You're trading in ETH. Well, you probably made some money here in Bitcoin this morning, huh? I mean, it's been a good trend on everything. Seem to like that 24.5, don't they? And see, the 5-year wants to go down, and the 10-year just keeps finding buys, just keeps finding bids there. I took a few trades, but I'd say it's been mostly a wash. Probably should have just taken my first trade where I made 10. Should have gotten 20 out of it, and then I'd just be done. This is the way that it's been going. Wireless caller, no thank you. Oh, some volume coming into the micro treasuries there. Actually a decent offer, but they do clear it. Hope we don't push 4K on ES. I'm not ready yet. It seems like 38.50 is offering pretty hard resistance at the moment. Perhaps they get through that, but okay. So it scratched that one. So I think that puts me down 7. And oh, actually, it's more than that. I think it's 20. Yeah, it's okay. Well, it is very disheartening to take it. You see a trade like that and not take it. I think that the one spot where like I had the best opportunity to really hit into it, like I was paying attention, I was kind of looking at it, but I just wasn't sure if I wanted to take a trade, was at 15. That would have been a great trade, right? Overall though, it's kind of a mess. Like, yeah, I just scratched it there. They keep pressuring that 24.5 and it keeps holding. And I got about 5 minutes left, so that's kind of like that's a no from me, bruh. But you know what? We didn't just come straight back down. So if somebody was gonna push back against this, or it was just the Bank of Japan and it gets washed back out, I think that we would have fallen back down already, right? So that doesn't mean that we won't see a little bit of a slip back down to 20. I think there's still a really good chance that we see 20 here today. And I'll reset these. But I think that they have just kind of reached the impact of the meta orders around 26 and are rotating around that I think is kind of like a double distribution kind of a thing. So I think they bought it up probably because they were anticipating the news, man. So as soon as I get out, it goes and it does the thing I wanted, huh? Shoot. And that would have been 10. Shoot. Bad luck on that one, I think. Because there wasn't any reason I was getting out, right? It was just, well, it's getting time. I have a chance to scratch, so why not scratch? I'm seeing if it's gonna go again, but it's not clear. If they get below this like 23, then maybe they might get another little rung and they get to 20, but I think overall I missed the trade. So this was a really insane move today, taking me quite by surprise. Not still a little unsure why it unfolded. Although the best theory running right now is that the housing prices were lower than expected and all of the other economic indicators were lower than expected, and then they were just trading in anticipation of that, and that when we breached the previous day's high, that we got a stop run on top of that, and the stop run on top of that just kind of like got everybody excited. That's our best explanation. They did step down a little bit there, but like, look, I would only gotten 10, and it's already coming back. So this is still like very much dead. I do think that there is a chance for some action in the next 30 minutes. Of course, I have to leave, but going into the London close, right? You could always get weird things that happen in the London close. But whatever they were buying for, they're done. They did their thing. Ugh. Sure does look good for the S&P 500, doesn't it? Let's come back to the ES here. Yeah. So we're stepping into that 20% down area again, right? And we're probably, you know, I think that the flows that we're likely to get here once we're able to hold above 38.50. Well, the next stop is definitely around 3,900, where there's a 100-day moving average. But let's say this continues like this. Sure. So 4,000. Yeah, I think 4,000 is a good call, dude. The moving averages don't predict where it's gonna end or anything, but they kind of become good benchmarks. And if we just look at, like, we're likely to have, although, you know, I really feel like it's more like after October 31st. After October 31st is more likely when I think that things turn bullish in equity markets. So there's 15. It sucks. But time for me to go. So I will see you guys tomorrow. I don't know if maybe we should just quit for the week, because I don't know how you top that. That was insane. So I will see you tomorrow, though. We'll still be here to chat. In the meantime, stay excellent, team.